I think we're actually, Tom, starting to anticipate it. But right now, what we're seeing happening is the beginning of the chase. And oftentimes, when we get that beginning of the chase, that is a secondary effect of it. I think we're actually even earlier in terms of the positioning. So it's been this spot up, volatility up market,
right,
which is kind of the opposite of what we would expect, really big bid to call options. And then I think even down the line, we might get the mechanics of the gamma squeeze, not the short squeeze, which is why I think there is still some continuation to this momentum.
Amy, all I really know about your business of derivatives is hedge when you can, not when you have to. What are your clients doing today? Are they buying risk? Are they buying protection? What are they doing?
Yeah, I wouldn't be a proper derivative strategist if I didn't say that old tagline, because, a few weeks ago when everyone was complaining to us about how expensive protection was, here's your sale, right? We're in the bargain basement now for those put options. But certainly that's the issue when the FOMO kind of meets the investor base. They don't want to hear that. But the reality is your cost of protection has really come down. You are starting to see folks deploy it a little bit longer term, because there's still things we just don't know. We don't know how these ceasefire talks are going to go. We don't know how the inflation mechanism is going to work its way through the system with an energy shock. And so, look, if I could say one thing, it's that hedges on the downside are a lot less expensive. Right. And so if you were complaining to me a few weeks ago, then maybe look at the pricing.
So, I mean, the simple way I measure volatility in the equity market is the VIX, and it spiked up to like north of 30. But here we are below 20. I mean, what does that tell you?
It's funny. A few weeks ago, I was on the road with my pal, Lori Calvasina. And
you're in speaking terms.
We're besties. I joke she's my work wife. And, we were out seeing a lot of clients. And if you remember a few weeks ago, like, things were gloomy. That's when the VIX was spiking. And I have to tell you, a lot of investors were back then really constructive, even with everything going on. And I do think there's been this kind of we've learned to look through geopolitics. We've just learned, we've looked at the 2022 playbook, we've looked at all the other playbooks for geopolitics, and we just say, we're going to look through it. And that's what the VIX is kind of telling you, the VIX is saying, we're just looking through this and we're moving on.
I want you to talk to our listeners and viewers who have ETFs. They're in 401ks. They have not reallocated their 401k since Nixon was president. They're a completely different market from Amy Wu Silverman. How big is your market? Torsten Slok has hedges owned 8% of treasuries this morning in his Apollo note. How big are the CTAs? How big are the hedge funds? How big is Dan Loeb or Mr. Ackman?
I think it's important if you're sitting there and most of what you do is very long-term in an ETF. The reality is you're probably fine, but it's important to know the mechanics of what these things are doing. They are pushing things around short term. And then in some cases, if you will, the retail crowd is the one who's doing the pushing, whether that is in options or starting to be in prediction markets.
Robinhood is pushing this around.
100%. And I can guarantee you, ever since kind of the meme craze, there's been reason to do it. They know about the gamma squeeze. This isn't kind of the field of just institutional investors anymore. And that's one of the most fascinating things that's happened in our market in the last 5 years.
Looking at your notes, Amy, and you say that on your desk you've seen a dynamic called spot up, vol up. So as the market rises, volatility is rising too. I thought it was supposed to be the opposite.
It is 100% supposed to be the opposite, but now it's happened so much that I don't even know if I can say that. I'd say one thing to keep in mind as it relates back to your question on the VIX is because spot can go up while vol is going up, sometimes you might actually get a higher VIX number, but it's while the market is rallying. And so that's a little odd. And we have to remember a lot of times that goes back to this demand for call options. Futures
up 28 now. Futures up 4040. The headline here, this from Axios, Mike Allen and the team over at Axios. U.S.-Iran talks expected in Islamabad, Pakistan, likely on Sunday. This definitely moved the market, no question about it. Okay, can I do an audible?
Yeah, let her rip.
Okay, Janet Lauren out with a great look at endowments across all the different schools. And I'm sorry, Princeton basically came in last place here in the last couple, like single-digit return. What would you do? How would you use derivative strategies in a boring college endowment?
Well, it's funny. As a proud Princetonian, we've actually we've actually heard this on the finance side. My understanding is that a lot of endowments actually had some money on the private side, and it's a little kind of less transparent. And I'd say
right.
the public equities and that shift has been what has been making the endowments that have done
well.
Stop
it. It's
before.
fancy people playing D1 field hockey who said we're not going to own Microsoft. Amy Wu Silverman right now, help Princeton and everyone else. Do you buy the Mag 7 here?
I actually think you do. And then I think QQQ, the volatility looks relatively inexpensive too. And I think especially as you get these IPOs down the line, your Anthropics, your SpaceX's, it's going to be really interesting from how much FOMO and momentum that creates, which again gets us into that favorite spot up vola.
Have you ever heard of this bullish?
Yeah.
I don't know.
Playing it, sure.
Calvasina's not this bullish.
Exactly. Amy, so on the RBC Capital Markets derivatives desk, what's a typical client for you guys? Is it a hedge fund or is it a long-only thing? Who's typical?
Yeah, I would say it depends on the region, but it's an institutional client. So it's a good mix. It's hedge funds, it's asset managers, it's pensions. And what I really enjoy about that is we get a good look at how these people who, they're either moving at a glacial speed or at very quick speed, how they're all thinking about the market. And then, back to what I mentioned earlier with Lori, we saw a good mix a few weeks ago, and the amount of constructive, very optimistic outlook was very shocking to me back then.